Banco de Chile is a Chilean bank and financial services company with headquarters in Santiago. It is a commercial bank that provides a complete range of financial services to a client base, which includes large corporations, SMEs and private clients. As of December 31, 2012, Banco de Chile has a national network of 434 branches, 1,915 ATMs and other electronic channels of distribution. According to 2013 year-end figures, it is the second biggest banking group in Chile by total assets, behind Banco Santander-Chile and ahead of BBVA Chile, and has a market share of 19% in terms of loans. It is the biggest bank in the country by total earnings. Since 2008, it has been jointly controlled by the Chilean conglomerate Quinenco Group and U.S. bank Citigroup. Operations are organized around 6 main commercial divisions: large corporations, SMEs, private clients, consumer finance, international banking and capital markets. Additionally, subsidiaries offer securitization, securities brokerage, mutual investment and bottomry, insurance and factoring, among others. Outside Chile, the bank has had a branch in New York for more than 20 years and has branches in Miami, Sao Paulo, Buenos Aires, Mexico City and Hong Kong, providing international services. History: founded on the 28th of October 1893 by the merger of the Valparaiso Bank, National Bank of Chile and Agriculturist Bank. Banco de Chile has traditionally led the Chilean financial market as one of the largest banks in terms of turnover and deposits. In 2001, the Chile conglomerate Quinenco Group bought 59.3% share of the company through the subsidiary company LQIF and took control of the bank. In 2008, Citigroup agreed with Quinenco to take a 32.96% stake in LQIF and merged Citigroup Chile operations with Banco de Chile. In April 2010, Citigroup exercised its 2 outstanding options and increased its share in LQIF to 50%. On December 9, 2004, Banco de Chile became the first Chilean financial institution to operate in the Asian markets, after closing a cooperation agreement with Standard Chartered Bank. Controversies: U.S. money laundering. In 2005, the U.S. Office of the Comptroller of the Currency removed the general manager of Banco de Chile, New York, from the United States banking industry, and imposed a $200,000 civil money penalty against the individual for engaging in unsafe banking practices, related to his involvement in accounts owned or controlled by the prominent politically exposed person and his associates. In addition, Banco de Chile New York and Banco de Chile Miami failed to timely respond to widely publicized reports of alleged criminal activity by this high-profile Chilean politically exposed person, and failed to gather and analyze information from applicable accounts in order to assess the potential for suspicious activity. The OCC issued a cease and desist against Banco de Chile for Bank Secrecy Act violations. The U.S. Financial Crimes Enforcement Network also levied a $3 million penalty on Banco de Chile for not identifying, monitoring and reporting suspicious activity related to a Chilean politically exposed person, his family and associates doing business in its New York and Miami branches. The high-profile Chilean PEP was confirmed to be Augusto Pinochet, the retired former president of the country who came to power in a military coup. Pinochet funds. In 2009, Banco de Chile was one of 4 banks sued by the Chilean government for negligently or deliberately helping former dictator Augusto Pinochet hide $26 million in stolen funds.
The other banks were PNC Financial Services Group Inc., Banco Santander, Espiritu Santo Bank. The Chilean government may have chosen to go after the four banks specifically because the documented evidence of negligence/willful blindness was stronger, said Michael Diaz, managing partner with law firm Diaz Royce & Amptag LLP in Miami, adding that the other institutions may be on the periphery of liability. Divisions. The divisions of the Bank of Chile Group are Banchal Corredores de Bolsa, Banco Credical, Banco Edwards, Banchal Seguros,